In this video, we're going to go over one of the most often asked questions we get at FitBUX in regards to insurances, and that is, what's the difference between term life insurance and whole life insurance, and which one should I get? All right, so let's jump right into it. Term life insurance, that's most of the time what it's called. You might hear it be called temporary life insurance. Sometimes agents will refer to it as such, permanent versus temporary. So when it comes to term life insurance, some of them will call it temporary. Whole life insurance is also sometimes called permanent life insurance. It's a play on words. I'll explain that later. Whole life insurance has a whole bunch of different types underneath it. So you have whole life insurance. They call it cash value life insurance, permanent life insurance. Those are the different names that it's called, but the actual types are like indexed universal life policy, variable universal life policies, types underneath. I'm going to talk about just whole life in general. Okay, so term versus whole life. Okay, I wanted to start off with, again, say that again because people might get confused. Term life insurance is called term life insurance, or temporary life insurance is the two names it's called. Whole life insurance is oftentimes called like permanent life insurance or cash value life insurance, or if you've heard the terms like indexed universal life, variable universal life, those are all whole life cash value policies. All right, let's dig into what this all means. All right, life insurance is there for if you die or somebody that you know dies, the death benefit pays out. That's the whole point of it, okay? Term life insurance is just that. It is strictly life insurance, okay? You get it for a set term, 10 years, 20 years, 30 years, so on and so forth. And it just simply, you make a premium payment, and if the person dies, it pays out. It's just like car insurance, right? You pay car insurance, nothing happens to your car, you get nothing back. If something happens to your car, you get a payoff from the insurance company. That's how term life insurance works, okay? Now, there's a certain type of term life insurance that's called like return of premium term life insurance. What this says is, let's just say you have like a 10-year policy and you pay premiums for all 10 years and you don't die, so you don't use it. They refund the premiums. A lot of people think that that's really great. They sign up for it. It's not worth it. Like most term life insurance policies, even before the 10 years, you get a new one because you can get better terms as years go on, potentially, the way they do the actuarial tables. So very seldom does somebody hold an actual term policy for 10 years or 20 years. But that premium costs a lot more. So if you're getting a term policy, my recommendation is don't get the return of premium term policy. Just use a straight term policy. You're making the payments. Hopefully, cross your fingers, you don't die, and so it never pays out, right? That's what you're looking for. Most of the time, you're going to get a term policy if you have like dependents, okay? Like somebody's depending on your income. Maybe you have a mortgage, maybe you have a car, whatever it may be. That's when you would get term life insurance, all right? Whole life. Now remember, I said term is just straight insurance. Now what the insurance industry did years and years and years and years and years ago is that they went out and they tried to say, well, we have a lot of people telling us that they can't afford the premiums and for a term policy and invest at the same time and blah, blah, blah. And what the insurance companies did was they looked at some of the tax loopholes and said, well, wait a second. Let's combine these two things. Let's combine investments with life insurance. And it's like, okay, let's do that. And what ends up happening is like they'll say something like, okay, you are going to get $1 million life insurance policy. So like if something happened to you, you die, it pays out $1 million. But you also get a cash value. So the cash value grows as an investment. That's where the different types come in, like universal variable life, index universal life. Like there's different terms of how that cash value grows. And that's where they sell it. It sounds great, right? Like I get this investment and I get a life insurance contract. But here's the thing. Insurance costs money. So most of your premium that you're paying goes to cover the cost of insurance. that cash value takes a very long time to grow. Like in the first 10 years, you're not going to see any cash value. It's going to take like 30 years. And even at that, you're better off just putting it probably in a regular investment. Okay. And so they sold life insurance like that for a very, very, very long time. And what ended up happening, let's just say you need $1 million life insurance coverage. And you say, well, I want a cash value policy. Your premiums could be something like $600 a month, $500 a month, something like that. So it could be like $6,000 to $10,000 a year, $12,000 a year you're paying in premiums. And let's just say the first year you pay $12,000 in premiums, your cash value might be like $500, okay? Versus a term policy to get the same $1 million in insurance, it might only cost you like $1,500 a year versus $12,000 a year. Okay, so that's why most of the time people will invest in or buy a term policy and then invest the money somewhere else instead of getting these cash value policies. Now I'm going to touch on a time period when it does make sense to buy like a whole life cash value policy. I'm going to do that at the end. But one of the other benefits though, why sometimes people do like the life insurance policies is because you could take loans against them on the investments and it's not considered liquidated. And so people want like access money for like a house, a down payment, building a business, whatever it is. You can do that and you just do it through the life insurance policy. Okay. How many people actually tap that loan? Not very many. All right. So that's why, I'm not a big proponent for most of you. All you need is going to mean a term policy. Okay. Now, like I said, I'm going to tell you like when you do need a whole life policy. I'm going to touch on that in a minute though. I'm going to go through tips first of how to get the most out of your policy. First and foremost, shop around and compare quotes, right? There's a bunch of different insurance companies. Get the one that costs cheapest and gives you the most term life insurance, okay? You don't really need what they call riders. Riders are all these things they add onto it. I told you about one already, like the retirement premium. That's a rider. They add it onto the policy. You don't need all those bells and whistles on a term policy. Just get something that's straight term and that's all you need, okay? All those little things add in cost. One of the biggest things is to review the policy like annually, periodically, maybe not annually, but every 1 to 2 years, because you might be able to apply to get more insurance at a cheaper rate, okay, depending on, because the actuarial tables are always changing. So you want to check in on it to say, hey, one, do I have enough? Because your situation is going to change. Do I have too much? Do I have too little? Can I change this to save cost? Do I need to increase how much I have? Can I decrease? All those things play a role into it. All right. So you don't want to just buy one and then forget about it. All right. Always also try to pay the premiums annually because it's cheaper than paying it monthly. And then you also need to think about how the beneficiaries receive the payout, meaning do they just get a check? That's the most common way because it bypasses what's called probate. Some people put it into their trust. You don't need to do that with life insurance proceeds, but you might want to depending on when you want the beneficiaries to get money versus when you don't want them to get money. So that I would talk to like a trust attorney on that to see when you would want that payout. Okay, now, as I mentioned, there is a couple of time periods when you would want to buy a whole life policy or a permanent policy or a cash value policy, as they call them. Okay, one of them is if you are putting it into a life an insurance or a trust. Other times we call these things irrevocable life insurance trust or an ILIT. Okay, and what that basically means is you're putting money into this thing and it's going to be paid out when you die. And most of the time it's used to cover like estate taxes and whatnot. And the way you do that is with a permanent policy, a permanent insurance policy. So an ILIT is one reason why. Most of you that are listening to this are in your 20s and 30s, so you're probably not ever going to use that right now. If you do any of that, it's probably going to be in your 50s, maybe late 40s, but that's something to keep in the back of your mind. The other one is this idea of what's called a super Roth or a reduced paid up type of plan. For retirement type of stuff. I'm not going to go through that on this video because that's a whole separate video, which actually will be rolling out here soon. But that's a time when you say, look, I have enough income most of the time. If you have over like 250 grand in income between you and maybe you and a spouse, and you've already done things like your 401k, your IRAs, all that type of stuff, and you're like, look, I got extra money and I want to do something else that's tax like beneficial to me. that would be when you do that quote unquote super raw thyroid. All right, so that'll be a different video, but today that's term versus whole life. Like I said, most of you are just going to want a simple term policy. When you're on your FitBUX profile, if you want to see how much you need, click the tool, how much life insurance do I need? It will tell you what you need, what your spouse needs. That's how much you should be getting covered in term policies. If you guys got questions and know how to get a hold of us, see you guys soon.